What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. Today, I'm going to be answering a question that I've heard a lot of recently, namely, what is going on with silver? Why is it taking so long to experience some of the big bull market rally characteristics that we might expect in an environment like this? Gold has really started to take off. Why is silver not following? What is holding silver back? Let's dive in. There are a number of factors that people usually look at when they're trying to predict and have an outlook on where they think the price of something like silver is going to go. The first thing that people are going to look at with silver is simply just what is gold doing, because historically, usually silver does something similar to gold, just to a much greater extent. So if gold goes up, silver, they expect to go up more. If gold goes down, you'd expect silver to go down more. And not only more, but it usually follows behind. So once gold goes up, then silver will follow afterwards to a greater extent, and same on the way down. Now, really, there's not a whole lot to say about that because there's really nothing fundamental about silver and gold that you would look at and say, hey, this is why silver usually does more than what gold does at a later time. That's more of a reflection on what it's done in history and on expectations and human action driving the price of silver and the price of gold that has led that phenomena to take place a lot of the times. There's really not a whole lot to be said about that phenomena specifically, but there are a few reasons why that normally happens. The first of which is monetary policy and what governments and central banks around the world are doing with currencies. For thousands of years, gold and silver have operated as money, and recently, within the past 50 years, we've had a system on Earth where gold or silver have not been legal money, and only a paper currency by declaration of a government has been money. But just because a government declares a dollar or a euro or a yen to be their money doesn't mean that something like gold or silver won't still operate as money, because the reason gold and silver found themselves by free markets for thousands of years all across the world to be used as money is because they work very well as money and they carry the characteristics of money whether governments declare them to be money or not. That's why when you look at wages paid in gold ounces to Roman soldiers, the price of a custom tailored suit in Greece versus today's salaries of our soldiers and the price of a custom tailored suit today, they're going to be very stable in terms of ounces of gold. The value of gold, the value of silver, they rarely change over time. More so with gold. Gold really doesn't change in its value over time. Silver does though. And so that's going to be the first difference when you're asking, what is going on? What is holding silver back? Silver has a lot more that impacts the price and its value compared to something like gold. Silver is used far more in electronics, far more in medical devices, far more for all sorts of industrial uses compared to something like gold. And so in an economic downturn or recession, especially one like we're facing now when the entire economy is basically shut, you're going to see that impact the price of silver a lot more severely than you're going to see it impact the price of gold, because the value of gold is far more tied to its monetary usefulness and its thousands of years of history just as money compared to something like silver, which has its value derived a lot more from its industrial uses. And so that's one of the things that is putting pressure, downwards pressure, on the value of silver right now, is just that its industrial use is being held down right now from the economy being shut. But even though silver's industrial use has more of a bearing on its value compared to gold, it still has operated as money for a very long time. And in fact, governments, along with gold, have usually declared silver as money as well. And that leads us to the second thing that people usually point to and wonder, why isn't silver doing well? And they're looking at the gold to silver ratio. And that's simply what is the price of gold compared to the price of silver and the relation between the two. Now, for a very long time, for a lot of history, the silver to gold ratio was about 1 to 15. The average over the last 100, 200 years is somewhere around 1 to 30, 1 to 40, and it all depends on what time frame in history you're looking at. The closer you get to today and the shorter of a time window you look at, the higher that ratio goes. To the point of today, it's about 113. Now, it has fluctuated wildly over just even the past 100 years. In 1919, it was as low as 17, and then it rose all the way until 1941, where it peaked at just about 97. It then bottomed out in 1967 at just about 15 or 16, rose up a little bit, bottomed out again at about the same price in 1980. Then the ratio rose again from there and peaked in about 1990 at 90, and then it fell from there until about 2011, where it bottomed out at just about 30, and then it's been rising ever since until we get to today at about 113. And just in case you're not clear what this ratio means, it's simply the amount of silver it takes to buy an ounce of gold. So when I say the silver to gold ratio is currently 113, that means it takes 113 ounces of silver to get yourself 1 ounce of gold. Now, a lot of people put a lot of stock into this ratio because we're currently at a record, and it's only gotten above 90 a couple times in history, and it's usually far lower, and every time it has gotten up to this level, it's plummeted. And that ratio plummeting can either mean gold comes down and silver stays the same, or gold stays the same and silver comes up, or a combination of the two. It just means that the number of ounces of silver you need to get an ounce of gold decreases. Now, I don't put too much weight in this ratio for two reasons. Number one, this ratio was held by law at odds with market forces for decades. There was a legal definition of the price of gold and a legal definition of the price of silver that pegged it at a 15-to-1 ratio. And as soon as the free market produced an imbalance, you saw the exact same thing that you've seen all over history when government intervenes with money, where the good money dries up and the funny money stays out. And then once it got so bad that they had to change it and they finally released it from that peg, you saw that ratio go from 15 to about 40 pretty quickly. So I don't put too much weight in the gold to silver ratio when you're taking into account that legal peg, that 15-to-1 peg that the government held it at for decades, because that really wasn't the true value of the relationship between gold and silver. Now, the second reason why I don't put too much weight in this gold to silver ratio is because the reason why we've been diverging from that ratio is because the monetary usefulness of silver has been slowly replaced as technology has gotten better and better. The main role of silver for thousands of years was basically to function as change for gold, the same way that coins operate as change for large denominated bills of paper today. But as debit cards and credit cards hit, that really eliminates the need to carry change around because you can just swipe a card. Well, it's the same thing for gold. As technology has increased and we have gold transfer systems available where you have companies that will store gold and transfer gold to each other between vaults in any amount that you desire to fractions of an ounce or fractions of a gram, the monetary usefulness to make change for gold disappears. You can make electronic transfers in any weight of gold, in any divisible, in any division, or any fraction of any gold measurement. And so with that, I would absolutely expect that ratio of silver to gold, the amount of silver that it costs to buy an ounce of gold, would increase over time because the monetary usefulness goes away. Just like most things that technology can improve gets cheaper compared to gold over time. When you compare food to gold over time, housing to gold over time, technology to gold over time, anything that gets more efficient, gets cheaper, you can have productivity increases over time, anything like that, you're going to see over long periods of time, it gets cheaper compared to gold. Silver, the same thing. The function of silver has gotten cheaper and easier through technology over time, and therefore you'd imagine that thing would get cheaper compared to gold over time. So I would expect that ratio would be widening. So between the historical lag between the price movement of gold and price movement of silver, and the fact that the industrial usage and the industrial needs for silver have a much heavier weight in the value of silver compared to just its monetary usefulness, more like gold has, and the fact that its monetary usefulness has been declining over time, when you combine all those three factors together, I'm not surprised at all in the performance of silver recently. Now, does that mean that I think that it's going to stay where it is or that it's not going to go up from here? No, I think priced in terms of dollars, pretty much any asset, anything with intrinsic value is going to go up in price. And so I think silver does have a fantastic risk to reward ratio. Similar to Bitcoin, I think that the downside risk is a lot smaller than its upside potential. But more and more as time is going on, and more as government continues to destroy our money, or I should say the fiat currency that they say is our money, the more I think we're going to see a divergence between gold and other forms of money. Gold has been for thousands of years a stable storage of wealth, and there is no sign that that is going to change anytime soon. Gold is like the Great Pyramids. They've been around for thousands of years, and if you had to bet, you'd say they're going to continue to be around for thousands of years longer, relatively unchanged. Whereas in this example, silver would be more like, I don't know, the city of Rome. It's got a great past, great history behind it. It's had a really long period of decline, hasn't done as well, and its value is more tied to people actually using it as opposed to something that just sits there and really doesn't change at all and doesn't really have its value changed by people deciding to use it or not. It just is what it is. And then Bitcoin would be like Silicon Valley. I know that was a crazy example, don't take it too literally. In summary, it looks like silver has a lot of catching up to do. If you're just going based off of history though, you might be a little bit disappointed in the upcoming performance of silver. I do think the risk to reward ratio is there, the downside risk versus the upside potential. It's good enough to bet some money on. I'm not using silver to store my long-term wealth though. Silver is more of a speculative play. Gold is more of a savings play. Thank you so much for watching. If you enjoyed the video, please hit that like and subscribe button. Also want to do a quick shout out to all my new subscribers. I really appreciate you guys hitting that subscribe button. Just past 4,000 subscribers on this channel, and I'm extremely grateful to you guys for that. I really appreciate it, and you guys have a great day.